All right, we're officially 2 minutes late due to sound checks and making sure everything works properly, backup recording, etc., etc. Thank you all for being here. We've gone through the painful process of sound checks. I want to make sure that the level is still good. I think we have projection. We tested that, so God bless technology. 2016 was quite an interesting year. And we're going to go a little bit, what I'm excited about doing for 2017 is that the markets are actually, at least from today's perspective, we had a little bit of inter-market relationships. Like, for example, earlier today, bonds rallied, of course, and then the stock market broke, and that inter-day trade relationship was kind of prevalent, something that we haven't seen in quite some time. We've got a lot of big changes in 2017. I don't think anyone on the planet doesn't realize that, with the Federal Reserve FOMC minutes that came out yesterday, citing political changes, not just the jobs number, which comes out tomorrow, 4.5%, their warning flagship number for rapidly moving rates more at a faster pace. Kind of an interesting concept. Now, the market is obviously up on I know the media calling it a Trump rally, and it's really a Republican sweep rally because it's a Republican-led government. And so we will be looking to see what kind of changes come about from taxation, new tax laws, and again, maybe a setback, not a complete stripping, but maybe just moderation of the regulatory requirements and restrictions that we set upon Wall Street within the Dodd-Frank Act, with the enormous amount of compliance that needed to get through and the levied increase in costs in order to make those compliant changes within our industry. So, as such, those costs have come down to us as traders, believe it or not. The CME group, you guys are all familiar with this. We now pay for quotes. Changes in 2017. This is pretty amazing. You go to Las Vegas, parking used to be for free. You could drive to Vegas from California, park at the casino, walk in, have a great time. Now they're charging for parking at the casino. That's a new thing that's changed, by the way. In addition, Caesar's Palace, you could walk in and sit down and watch the sports book, and now Caesar's Palace charges for their seating, which is an interesting change. And I'm just mentioning this because we did celebrate New Year's in Las Vegas. So there's just an enormous amount of changes that are taking place from a micro perspective. Of course, I'm sure I could count more gray hairs on my head, etc., etc. One of the changes, if we could, that one change that hasn't taken place is the fact that we need to give a risk disclosure. So this is one thing that remains constant. If we could just focus your attention right here to the risk disclosure. Remember, trading is risky, and this presentation is for educational information, and it's unlawful to reproduce, redistribute, copy, and I don't know why someone would, but there is your risk disclosure for this presentation. Past performance is not indicative of future results. All right, so adios 2016. Some of us, by the time Christmas came, from October through the election and beyond, was a quite a strenuous time period. And I would have to say it was I called it a euphoric year, but the real word of the year was dubbed surreal. So surreal is the dubbed word. I think it's interesting. Euphoric, if we go back down memory lane, remember we sold off in January on everything was a euphoric selling spree, right? I mean, it was amazing. And then after the election, it was a euphoric buying spree. So, but anyway, also I wanted to just, you'll note that we have a lot of coloration today is used, our headers in green, because, in case you weren't aware, 2017's color theme is called greenery. It signifies beginnings, a fresh new year, healthier food resolutions, growing vegetarian trends, grass in the outdoors during spring and summer. It's the color of my book, Mastering the Stock Market. It's the color of money, and it also signifies Tom's main food ingredient, salads. Congrats to him. You may not know this on a personal basis. Tom will be joining us at the top of the hour here. I'm going to get through, obviously, the disclaimers, and then our trade outlooks, and then Tom's going to come in and we're going to banter together and look forward. So I'm actually really looking forward to staying with Tom on my platform today. He's lost over 50 pounds, by the way. The other night we were chatting, and I said, yeah, my wife and I had to go. We were in a car. He called me in the evening, and I said, hey, we missed your car. We were in a store. We had to take a run and get some dessert. And he goes, had to? I said, yeah, had to. It was a choice. It was a choice word, had to get dessert. He goes, what? I go, well, I went for a cannoli, and my wife went with a piece of Black Forest cake at the bakery there. He says, oh, that's nice. I've been on a diet for 6 months, lost 50 pounds. I said, oh, all right. Well, that was a little insensitive of me. So anyway, green is the color of his food diet. So we want to give him congrats. And you know, taking care of ourselves is very important as traders. Many of you are familiar with my work. This is the Candlestick and Pivot Point Trading Triggers, a classic. It's in the process of being, what is it called, the second edition. It's being revised, updated. It was written 11 years ago. It's funny if you go back and read that first chapter, as I did painfully the other day. I'm going through it. I'm like going, wow, I can't believe I wrote this stuff. It was pretty amazing. The advent and increase in popularity looking at euro currency, like the FXE, and also looking at the study of seasonality between stocks and the underlying commodity, which was the basis of that book, Commodity Traders Almanac. And then fast forward to December 2012, that green book, the Mastering the Stock Market, where we came out and shared with the world in a written format about how we use some of the things we're going to talk about today, especially volume changes in the marketplace. And many of you are familiar with the fact that either through the Traders Expos or maybe coming out to see your investment groups, where we help popularize this old tool called On Balance Volume, which, as a matter of fact, that tool, On Balance Volume, we're going to discuss ways to improve upon that and things that have changed, and I think are going to be looking great as a useful benefit in our trading for 2017. So anyway, we also in that book talked about PPS and person's pivots and high and low close doji scans, which was just an amazing amount of trades that populated from 2016 and continue to even today, as a matter of fact, with the sell-off in the S&Ps from this morning. A really nice setup. But I want to go through quickly a year in review with you guys and look at where we came from. A year ago, January, you remember Royal Bank of Scotland, it was RBS said sell everything. And a year ago, we had that $1.5 billion lottery. I don't know if you remember that one. I mean, I kind of had to go back and check things out. $1.5 billion lottery. And then my PPS buy signal scans. That PPS buy signal scan on January 19th, single most important day of last year. It populated an enormous amount of, while the world was in a market meltdown and everyone was selling stocks. I mean, you could see, look where the S&P handle was, 1976. And this is on January, this, by the way, is January 8th. I think it was the 8th or the 6th. I can't remember. It was right around there. Gold is, ironically, look where gold was trading a year ago, 1087. If you look at where gold is today, real quick, I'll take you down a quick memory lane walkthrough. If we take a look real quick, just so that you can see, gold 1181. Look at copper prices. We're at 253. And if you note, last year, gold 1,087. So even with the meltdown in gold, we're still higher in gold, $100. Copper prices are sharply higher. look at the euro currency. Would you think that the dollar has rallied? Everyone made a big deal about the dollar and its strength. Look at the euro currency at 107.71. If you've looked at the euro currency lately, and everyone would think that the dollar rally was so, stupendous, let's take a look at the euro currency. Here we are at 106.37. Narrowly, not a huge change. I mean, actually, if you take a look at their performance from 2015 over the last 2 years, we really haven't gone anywhere. It's flatlined. So everyone talks about the strength of the dollar and higher interest rates, and when we look at a relative change over the last 2 years from January, February time period, we're not that far off. It's just we haven't rallied. So it's not like the dollar's gained a tremendous amount in this time period. It's just it hasn't lost it back either, right? So in order to figure out, my big thing is in order to figure out where markets might go. And here's the dollar index, right? So in order to figure out where markets are going to go, is the dollar going to surge higher or break? We ask ourselves, where has it come from, right? Where has the dollar come from? And, while we did have this nice rally lift in 14, it was 2014. In not 1 but 2 years, we really haven't seen a dramatic change in the U.S. dollar, which is ironic because with yesterday's announcement from the FOMC, when they said, this is the minutes that came out yesterday, they said we're going to be looking at possibly a faster pace, an increased pace change of hiking interest rates. Well, I would think something like that would have caused the dollar to rally a little bit more than it did. I'm looking at this longer term, and we're going to cover each market one by one because I think it's fairly important, and it will help give us maybe a gauge of what to look for and expect if the Fed is still data dependent. And I think the Fed just turned less data dependent and more fiscal dependent. They're more apt to be paying attention to what's going to be passing as far as new bills in Washington, D.C., tax reform, et cetera, than they are maybe the unemployment report, as they say. So I think there's a major shift in what the Fed's paying attention to because they did mention it. So we need to make sure that we are aware of that loud and clear. It's interesting that this is the on-balance volume indicator, and this is a volume indicator as well, and you can clearly see that there is a difference in the direction. This volume indicator at the bottom of your screen is pointing down, and the on-balance volume is pointing up. And we'll get to that later in the session as to what this is comprised of. I just wanted to kind of go through of where we've come from and what I'm looking for. So last year, we talked about the main markets here with the S&Ps at 1976 after the crash. Crude oil is obviously the biggest change of them all as far as pricing, besides the S&P, of course, right? Looking at the bond price at 155, that's a big change. Gold prices, the euro, and of course copper. So it's interesting to note that also natural gas is higher now than it was last year. So we have in the last year, everything has been dollar, and you would say, wow, the dollar really didn't change that much. And gold's, $100 here, $100 there, here a buck, there a buck, everywhere a buck type of thing. I'm here to say that I'm looking at perhaps the dollar not to be as weak, and possibly we're going to see the euro currency, since markets that don't go down when they should tend to rally. I don't know if that's an old trader's wives' tale, but we're going to have Tom come in and banter with me on the fate of the dollar, and of course, what would that influence? Number one, bond prices, right? So the dollar and the demand for dollar, and of course, direction of interest rates is going to be a kind of like the key critical factor for the first quarter. When the reason I say the first quarter, gang, is obviously we've got the January 20th inauguration, and then everyone makes a deal about the first 100 days of the new administration. What can they get done? That's going to be kind of paramount of how we set the tone for the next quarter going into second quarter Q2. So besides looking at earnings, which is coming up in the next 2 weeks, right? Earnings season, we got a lot of things developing. Last year, as we went through January, and that was for some a very tough month. February for us, and this is something, we started the market meltdown in January. In February last year, we started the market melt-up led by energy. And this is an actual quote. I said this could be the year of the cat, back on a tweet that I sent out from 2/16, because we started to notice that there was a big change in industrial stocks, and Caterpillar was in the low 60s. I don't know if you've seen Caterpillar lately, but the industrial sector performed quite well. In March last year, can you believe where we've come from? And a lot of this stuff came, and I'll be honest with you, I ripped a lot of this off of my Twitter account. So these are some of the tweets that we came out with. March was the beginning of what we called a steel stock rally. At the very beginning of last year, U.S. steel was at $6. Do you guys remember that? So when we look at steel stocks, look at U.S. steel. Just in a very short period of time. Here's in a very short period of time. Here is a little high closed doji pattern, that high closed doji system. And back at the beginning part of the year, there it was. I mean, literally $6, $7 instrument U.S. steel, now trading at 36. Who would have thunk that this would have been that type of move? Well, we actually saw a lot of scans between U.S. Steel, AK Steel, Nucor, NUE is another one. I mean, the entire steel sector just really took off. In any event, that was February, and then into March. It was also my birthday. That's only the picture that was there. It was a birthday month. In April, energy continued to move, and we had that similar pattern once again. That high closed doji system triggered off and fired off, and it continued to work well throughout the year. And we saw the XOP, which, by the way, single-handedly, the energy exploration, the XOP, was the strongest performing sector last year. Second place in second place, we saw the semiconductors from a percent change from year to year. XOP was the #1 performing sector that I track out of 22 sectors. Last year, May, Amazon trades at the 666 handle. I don't know if you guys saw the omen, but that was pretty bizarre. June, Led Zeppelin won their Stairway to Heaven copyright case. And again, I think of all things, we had Brexit. I mean, how could you not mention a year in review and not put in a plug for Brexit? Plus, we had most importantly, this little pattern up there. And these charts, by the way, I ripped off from my own Twitter account. These are the kind of things that we tweeted out last year. We had a massive, major divergence where we had secondary higher highs, and then we had this little low closed doji top with a volume divergence pattern, which was very powerful in looking at TLT. It happened to be right about the high for the year. That was as we were leaving June and into July, by the way. When we got to actually at that same time period, many of you might be familiar with the Thinkorswim platform, and one of the things that we kind of noted was that someone had bought or traded a 26, a 21, a 5-wide vertical put spread, was adding on to their trade. We were in these and buying the 31, 26, and I had tweeted out, of course, after the fact, because we had bought these a couple days earlier, and it was like, it looks like there's a very large trade in TLT, the 26-21 D's put spreads. So that was one of the trades that we were discussing. Obviously a very timely tweet and a very good indicator. And again, coming into July, we still gave out some pretty good buy signals with the PPS indicator. So halfway in the year, you know, a lot of the stuff that we were teaching still worked, and a lot of the stuff that we trade and the methodology was really doing well and working well. This is irony. Define irony. The ironic, the irony of traders using my PPS indicator on Thinkorswim platform to find a buy trigger on Ameritrade stock. So back in July, what was interesting though, you know, not to be funny, but the broker-dealer sector last summer, institutions, you started to see an accumulation. If you go back in time, and I'm going to just do that real quick here with you guys. So back in July, what was interesting? So back in July, when you start to see this July time period and you get this buy signal, I mean, this is the result of that move, the beginning of that move. I mean, who would have? I had no expectations that this move was going to get and go from 26 to 46 on Ameritrade. Of course, the majority of that was interest rate differential changes, the expectations that the Federal Reserve, now think of it this way, when interest rates go up, regional banks would benefit, and so will broker-dealers because they loan money to traders who are short stock, right? The broker loan rate. So they do make money when interest rates go up. So Ameritrade, and it wasn't just Ameritrade, SCHW, Charlie Schwab, go ask Chuck, same pattern, ETFC, E-Trade. I mean, the whole broker-dealer segment lifted and had about the same type of pattern. And by the way, if you look here carefully with me, just because this is important, in July, the PPS buy signal, it showed a heavy concentration of stocks, not just Ameritrade, but the entire sector of stocks generated buy signals all at the same time. Now, let's take a look at hindsight and say, well, what else helped to identify strength and participation in that move? Well, when this buy signal was created, note that this is a volume indicator right here, but it's not based in absolute terms. It's absolutely range terms. It's a bit different. But if you look at your on-balance volume, it still showed an increase of value changes. Now, I'm going to just add one thing here real quick, because that's the game changer. One of the things that I think is important for 2017. Let me go over here, and I'm going to go to Insert Analysis Technique real quick. I hope real quick. And we're going to change over and just add a quick volume. And I know this to be kind of a situation that many traders have struggled with for a long time. And what that is that you look at the volume levels, and I mean, quite frankly, this market from July into almost the end of September, the volume trend was down, and the volume trend was up, the volume trend was up. I mean, the bulk of the move right there was giving people a major head fake in the fact that the volume trend was down, not giving them the confidence that there was some real buying support underneath the market. But that on-balance volume really did show a difference, as did this little other volume indicator down here. So I wanted to tell you guys that if you're using volume, I'm not saying to abandon volume. It's never been my intentions for anyone to abandon volume, but it's been my intentions to say we've had some dramatic changes over the last decade. And as some of you are aware, my message has been, you know, this is a tool that was created back in the 70s, the OBV. It became so, I helped popularize this to the point where actually Thinkorswim, it's really a nice feature, added it as it's a popular scan to include on-balance volume positive changes. Anyway, so back in July, we saw a dramatic change of people starting, institutions more likely, accumulating buys in broker-dealers. I had an individual, to be honest with you, I'm not sure who the individual is, but he sent this in to me. He goes, I'm on vacation. It's a great beach read. This is Mastering the Stock Market. Whoever the guy was, there's his big toe sitting on the beach. I thought that was a pretty profound. It was a nice compliment. So the guy took, maybe he needed to take a nap or something, but I mean, technical analysis on the beach, maybe he avoided a shark bite. I don't know. As we entered into September, markets took a seasonal dive, and golf legend Arnold Palmer passes away, if you're a big golfer. In October, a couple things happened. You remember this? Kim Kardashian gets robbed in Paris, and we had this thing called a hemorrhoidicus major Russ hurricane threatened the U.S. coast. And that was a big blob. And if you have ever come down to visit me here in Florida, we live about right there, right there. We live right there. So seeing this big thing, thank the Lord, it avoided us, and it became a nothing event. But in any event, as we got into October, we also had, of course, the election season heated up with the debates. Oh, my God. Then November came. Being a Chicagoan and watching the Cubs, it was a sleepless month almost, staying up, watching those playoff games, and watching the Cubs win the World Series after the first time in 108 years. And I think just between the surreal event from October and the amount of the Cubs win, and again, the Trump win, and then finally we get into December, and Army beat Navy for the first time in, 14 years. And I have a little bit of a connectivity with Army. My father and grandfather were both West Point grads. So I've always had to root and just throughout my life, it's not that they had a 14-year losing season. Army just has had a hard time beating Navy throughout history. So anyway, that was a big thing. We had Christmas and Hanukkah coincided at the same time for the first time in, I think, 30 years or something like that. And Apple traded to a high of 118. All right, so that was a year in review, pretty quick. So where do we go from here? Well, I'd like to share this with you because this is something that I put out every month. This happened a couple years ago when the Swiss bank announced, if you guys recall, a rate change, a surprise rate change. And this spread worked so well, it was sickening. So on a seasonal basis, some years are better than others. These are spreads, commodity spreads. Now, spreads are not less riskier, but as a seasonal trader, someone who wrote the book on Commodity Traders Almanac, every year certain things happen. And we're going to get into both stocks in just a minute, but right now I want to focus on commodities because this is kind of interesting. Buy crude oil on or about the 12th of April, the 12th of January. That's the April futures contract. It should outperform relative to heating oil. And you want to liquidate that spread before 216. If you're a commodity trader, buy April cattle, sell March feeder cattle on or about the 12th, liquidate by the 15th of March, buy March Canadian dollar, sell Swiss franc, buy Aussie dollar, sell Swiss franc. It's the same day. Now, these particular spreads over the last 26 years have an 80 of more than a greater than 80% win probability. Okay? So that's why I selected these trades. And I wanted to point out to you that it was actually 2015 that this spread right here, the Aussie or Canadian versus the Swiss, was a monster win. I don't expect it to be that type of a trade. You can go and, if you take a gander, if you don't know how to do this, let's go over to using Thinkorswim real quick. And I'm going to just go over to a chart. And let's get let's get a daily chart. Let's go over here and maximize this sell. And we're going to get rid of this. Let's see if what you can do is, let's say you're going to do a commodity spread. The one that you want to be long, is / and maximize this cell. And we're going to get rid of this. Let's see if what you can do is, let's say you're going to do a commodity spread. The one that you want to be long, the one that you want to be long, I think that's it, is forward slash, well, if we were going to go forward slash the euro currency, for example, forward slash let's see, go over here, I cannot remember, let's go to futures, let's go, I want, what did I want? I want 6A, I thought I did that, forward slash 6A, forward slash 6A dash forward slash 6S, I thought. There it is. Okay, so now we have a bar chart. Now, here's what you're looking at. You're looking at a spread differential, and what you want to do is change this style, by the way, guys, and you need to go from candlestick to a line chart. Anytime you do a spread chart, you want to change it to a line chart. So what this is projecting is a spread differential between the Aussie, the Australian dollar, and the Swiss franc. And I believe what we're looking for is the spread to widen, get more positive. So from a seasonal perspective, on or about the 12th. Now what's neat about this is if I'm looking for a seasonal change for a market to go up, I don't want it to have already rallied to then get long. I would like to see the seasonals, if it's supposed to go down into the 12th, and then I look to buy. And at least I could look to see and what I like about this particular pattern again this year is that we have a lower low that we could kind of look at and maybe trade off of a bounce and maybe form a slight double bottom in there. So today being, we're a little early, but the whole point of today's session is to prepare you for January in the first quarter ahead. All right? So these are those particular spreads and how you utilize that on Thinkorswim. Now, there's a lot of talk about profit taking, sell-off, tax deferred, and we put this list out every year. Been doing it for over a decade. And every year in the middle of the end of December 23rd was a Friday night, I sent this list out to my clients. And they get this, and what we're looking for is obviously stocks that are vulnerable to profit-taking correction during what we call the typical January break. Semis for an ETF is one. The insurers, the KRE. The cable company, Internet, Comcast. Now, Netflix is a very interesting one. Netflix, the reason it's green, guys, ladies and gentlemen, the reason it's green is because earnings is on 118. And what has typically happened with Netflix on earnings is it has a strong seasonality to go up. So this is a tricky trade that you do not want to play on the short side going into earnings on the 18th. That's why it's green. Halliburton, Microsoft, NVIDIA, which is giving it back. Texas Instruments, Xilinx, Caterpillar. Ironic, Caterpillar was our buy of the year last year, and this year we're looking for a pullback in it. Boeing, by the way, in the industrials. Boeing, no matter what, and I know the media talked bad about Donald Trump, negotiating with Boeing to make a cheaper Air Force One, and then they're making a big deal about Boeing stock going down. You guys recall, probably heard that in the media. The funny thing is, and I know the media talked bad about Donald Trump, negotiating with Boeing to make a cheaper Air Force One, and then they're making a big deal about Boeing stock going down. You guys is actually near its 52-week high. So if anything, we would be looking for this thing as we get into the January break, which is about mid-month, which is about almost next week, guys. All right? So with that said, that's our list of stocks. Now, here's another one that I wanted to put out to you guys, and if you're interested in this, we will have this available after the event. But biotechs, this is what we're looking for, and this is the key. The key is not looking for a bounce for the next 2 weeks. It's from the early January lows, which we're looking for that break in mid-January, into April. So this list is a little bit different than tax loss selling. This A lot of these stocks absolutely have gotten pounded, but we look for seasonality and 52-week lows on volume convergences. Now, today, the department store sector, Macy's, Nordstrom, JCPenney, the list goes on, got hammered. Ralph Lauren, some of the stocks got nailed, right? But we're looking at recovery into the April time frame. So you got to give and look for some buy setups in the next week or so. One of my favorite in this list of biotechs, besides Mylan, Gilead, Vertex Pharmaceutical, VRTX, in the consumer staples, Unilever, and Hormel. Now, if you're a single guy, you're not on a diet, and you're lazy, I'm here to tell you, premium crackers and Hormel chili, nothing better than a beer, and that is a dinner for, I mean, that's a gourmet dinner for a single guy in college, right? Hormel chili with good stuff. Another seasonal trade right now is a little stock called P&G, Procter & Gamble. They're the parent company. PG is the symbol. Parent company right there. It's cold and flu season of NyQuil, the greatest over-the-counter cold and flu medicine known to mankind, Procter & Gamble. Procter & Gamble did not make my list, but you may want to look at it. Now, we put out CenturyLink in the communications, and it's already up about 8%. So you got to be careful with this list. But I like in the internet, Trip Advisories, the financials, Legg Mason, it's the asset management company, Ben Franklin, T. Rowe Price. These are companies, Goldman Sachs. These are companies that have done well. Legg Mason, I don't know. Maybe they're truly invested in a bond fund, or they put all their money in the bonds, or they're probably not in stocks. And here's why I say that to you. Ben Franklin, T. Rowe Price. These are companies, Goldman Sachs. These are companies that have done well. Legg Mason. Let's take a look real quick, and you'll see what I'm talking about. All right? Tom's online with us. He's ready, and we're going to get Tom in here in 2 seconds. Goldman Sachs. Welcome, Tom. Thank you for being here. I want Tom to check in on some of these things. There's Goldman Sachs, and here's Legg Mason. All right? Tom's online with us. He's ready. So as you can see, these are Legg Mason, Beverage, Monster, and some of the other names that have been on our list. Now, what's the difference between my buy list and just any stock at a 52-week low? Once again, there's a couple considerations. The sector has to be looking good. There has to be some volume considerations, and there has to be some seasonality. And that's where I put my list there together. So as far as different ways of looking at the market, guys, you can take a look at how to get a hold of what we put out every week in this weekly thoughts and observations. So great report, a great way to get a hold of phenomenal information, email alerts, execution orders, stock and option strategies that we put together every single week. But I don't want to bore you with that. What I want to do is introduce Tom Sosnoff. 2017 promises to be a big changing year. I think I've introduced you to a couple strategies. Number one, that, and again, seasonality trades for commodities, stocks that you should be on the alert for sell-offs, and again, looking at stocks that have the power to move higher going into the April time period. But the funny thing is what, where, and when we have changed over the last decade is amazing. We trade different products. I remember distinctly with the gentleman that's here with us right now, Tom Sosnoff, and nobody, and I mean when I say nobody in this planet knew what a treasury bond was. And I know for a fact Tom was a major, I don't know, I'd have to say proponent of increasing the public awareness of the ETFs called TLT, TVT, ETFs, and teaching people how to trade. I remember Tom inviting me on a show when it first started called Tasty Trade, and I was talking about this little-known spread analysis called the knob spread, notes over bond. And, you know, I think it's something that Tom has taken to a whole new level in teaching a lot of people. And with that said, we still to this day are seeing more people take it upon themselves to trade the old school stuff, which still works to this day. And with that said, I want to introduce Tom. So, all right, Tom, what we've been talking about, wait one more second.
I'm ready. Sorry about that.
No, it's all good. Hey, Tom's here, and Tom's taking over right now, guys. And, you know, Tom, I think you would agree with me, if technology was perfect, the NASDAQ would be at double-digit new highs.
So, all right, Tom, what we talking about?
Isn't it? I thought it already was a double-digit new highs. It seemed like it made new highs today. I had to put, it was one of those NASDAQ black tape days for me, so.
Well, what you missed, Tom, in the beginning is I threw you under the bus in a nice way, kind of. I let everyone know I was so proud of you when you told me I had to go. When I told you I had to go get dessert, you just said you had to. No one has to get dessert. And you go, well, I've been on a diet for 6 months, John. And the funny thing is that in 2017, the yearly color, the color that signifies 2017 is a paisley green that resembles salad. And I think that's probably your main diet food right now.
You just said you had to? No,
yeah, and I'm so sick of salad. You don't make sense of salad. You know, the old Simpson thing. So, yeah. I had to, though, if I wanted to stay alive, I had to go on a diet, so I had no choice.
So, before I knew folks on a personal note, before I knew Tom was on this diet, I'm going, hey, have you had Rick Benny's yet? Have you had a Gino's East Pizza? I'm laying off all of my favorite Chicago stuff, and Tom's like, John, I'm on a diet, been on a diet for 6 months. Thanks, pal.
Yeah, I could use a Rick Benny steak sandwich right now. It'd be perfect.
All right.
It would kill me, but it'd be perfect.
So that you know, the color of 2017 is green. It's a greenery color. It's a fresh start. And that's so symbolic because you are at a new venture and a fresh start for 2017. Let's hear about it.
Well, it's kind of a crazy story to say the truth. It wasn't what we intended to do. After we built Thinkorswim, years ago, our feeling was, well, first we had to build Thinkorswim to create the technology that, to deliver basically a way for people to access the markets with really cool front-end technology. That was kind of our objective. And we thought that through scaling with technology, you would eventually get to the point where you could, where people could use all the products and could start trading and they would learn the business. But what we recognized after about 10 years in Thinkorswim, and also, unfortunately at the time we were bought out, so there was nothing we could do about that. We decided to build Tastyworks, and the reason we built Tastyworks was to provide the content to support the technology that existed. And we thought that it would be kind of really special if we could, let content be the driver into the next decade. So, in this, where we currently are now in just starting 2017, when we were just starting 2011, we started building a think tank, and the purpose behind the think tank was, let's just do the research to figure out all these crazy myths on Wall Street. Like, for example, that you're supposed to let your profits run, or you're supposed to try to manage your losses, or you're supposed to, do this or that, whatever they were, or that there was some kind of embedded know-how somewhere in Wall Street that individual investors couldn't access. And that stuff really bothered me. It bothered us to our core. And you and I come from very similar, professional backgrounds in the trading business, where I kind of felt like passive investing was something that it never made any sense to me. Passive investors don't learn how to take risks. Passive investors don't learn how to make decisions. Passive investors never learn about finance. Passive investors really don't get the quantitative side and the probabilistic side to investing, and they don't understand efficient and symmetrical pricing models when it comes to, stocks, options, and futures and everything else. So one of the goals behind building a think tank was, let's build this and let's provide all this information to individual investors all over the world. That's all cool, but it's also really expensive to do. And over the years, we've had relationships mostly with Thinkorswim and TD Ameritrade, because obviously we believed in the platform, and because we built it and we loved the platform, it was our platform of choice. And as we started to build Tastyworks out, John, over the last, it's taken us almost 6 years at this point. I don't think that we felt like we could maximize the value of what we're building individual investors' facts is you have to be able to scale the content inside of a piece of technology, and then you have to be able to deliver rates so that if you're trading actively, the percentage of your fees is reasonable relative to the amount of trades you make. So it's not a question of, it's not a question of churning or anything like that. It's really a function of, what percentage of my profits do I want to pay in expenses, and how do I get that number lower so individual investors can keep more of it while I'm controlling it back. So towards the end of our relationship with TD, we decided, okay, the only way we can really go out and create this model is if we own the entire package, the content, the technology, and the rates. And so we built a company called Tastyworks, and we just launched it 2 days ago. It has ridiculously low rates. It has unbelievable embedded content, and it's a really slick piece of very fast technology. We built the first retail platform on high frequency technology middleware, so it's lightning fast and it's cheap, and it's not a heavy platform. It's very thin. It's a software. It's downloadable, so it's a pure piece of very fast. So I got a little feedback there. So it's a pure Java client. So what I wanted to do was build a platform that encompasses rich technology content, and then offer it out. Say, here you go, world. Here's the platform that can take you to the next level. It won't beat you up on fees. It will give you the fastest technology ever delivered to individual investors. It's simple. It handles all the complex products out there, and it delivers embedded quantitative research inside of it to make it, just to basically support what whatever it is you want to look at. If you want to look at charts, there's charts in there. If you want to look at quantitative analysis, it's built into it. And so that's it. I mean, it's that's it in a nutshell. That's the Reader's Digest, the 3-minute version. Anything or even click anything, you just essentially pull to whatever strike you want, and then just hit confirm and send and route the order. But the neat thing about this is an order right now where I'm buying the 45 calls and I'm selling the 60 calls, and if I can that's a table view, but I can go to a curve view of the same thing, and I can look at it inside of a bell curve, and I can trade right from this bell curve. So if I wanted to move these 45 calls back up to the 50 calls, I just drag it right up there. If I want to move these 60 calls back to the 55 calls, I just move it there, and now I have a 5-point wide call spread. You can confirm and send down in this corner, and you send the order, and that's all there is to the entire platform. The average fill times are 220 milliseconds right now, which is a fraction of the rest of the industry, and the quotes are just driven straight through without any throttles whatsoever. So the entire process is lightning fast. It's super simple. And John, we built a rate structure that's going to blow you away. $1 for options, $2.50 for futures, and $5 per stock. But that includes zero to close the trade. So you only pay one way, and the close any trade you want is free. So all you basically pay for is like those rates. You can cut those rates in half if you consider opening and closing. And the cool thing about that is it lets you trade as often as you want, obviously with as much frequency as you want, to create the most amount of law of large numbers as well as predictable outcomes. So the platform, again, you can go from table mode, which is more of a traditional mode, to a curve mode if you want to see it in graphical form, because some people are visual and some people are numerical. And everything else is built directly into the front end of the one-pages platform, so you never have to go to the pages. Like you can look at your position from a single page, you can go to a trade page, you can look at a watch list, which is all scannable and configurable, so you can scan for anything on there, like whatever indicator, whatever you want to put on there, it's completely scannable on the watch tab. You can watch our network from the Tasty Trade page. There's a charting package in here, which it's not, John Person like, but it is clearly, it's competent, let's put it that way. On a scale of 1 to 10 for you, since it's not our focus, it's probably like a 5 or a 6, but it's not a 1 or a 2. And then we also have a follow tab where you can watch all of the various traders and employees at Tasty Trade, and we follow all their trades and all that kind of stuff. And so, and that's the crux of the platform. It's very inexpensive, very fast, very simple, beautifully designed. Same designers that originally designed Thinkorswim. It's the same CTO, and it's a lot of the same designers, and it's a new vision 15, 16 years later. That's the crux of the platform.
Well, it's and I know that Tom is going to be soft and John's going to be loud. So thank you all for putting up with the audio issue. But this, I mean, to come in and Tom, once again, hopefully I'm not blasting everyone out with the sound differential, but Tom's new platform, Tastyworks. Tom, it looks like what I'm hearing is new. I'm hearing almost free, and it sounds like it's faster than lickety split, which is awesome because a lot of platforms, not to mention anyone, as we all know, all of us, everyone knows that not all platforms are great. And the more users you get on a platform, the more problems there are. And especially on those really busy, hectic days that, you know, that broadband kind of gets bogged down a little bit. So this...
to be fair, it's not so much, you know, even exchanges get bogged down on really hectic days. But the real difference is that there just hasn't been a lot of new software platforms built over the last decade. I mean, there's been a few web-based platforms that have popped up in the last 10 years. But most of the software platforms that were aggressive out there, you know, are 15, 20 years old. And those are the kind of more aggressive trading platforms. Those are kind of the really cool designs. And this one just has very different technology because there's more technology available there. So it's definitely not better. It's designed differently, and you know, and the way the internals are, and kind of the middleware that it's built on, it's more in line with it. You know, an easier way for me to explain this is if you were in any business other than finance, most businesses will disrupt their own business, especially if you're in the software business. You'll disrupt your own business by offering different versions of your technology over the years. So, for example, if you're on an Oracle database, Oracle will change their software up every couple of years. If you're on a Microsoft, you know, operating system, Microsoft will issue a new operating system every couple of years. If you're an Apple customer, you know, Apple will come up with a new iOS version every couple of years. You know, a new operating system every couple of years. And the same thing with Cisco. Every major tech firm will come up with new operating system and new technology every couple of years because essentially they don't disrupt themselves, they will miss out. Amazon does the same thing. Well, in the financial business, nobody ever disrupts themselves. They use the software until they get disrupted themselves. And so there's almost never any new technology because nobody wants to put the money into technology and nobody wants to put the money into content. And that's what we do.
Well, Tom, I think that your time is very valuable, and this is, I mean, just an incredible, I thought it was a great time for you and I to get together. It's been a while since we've both been either doing the old, I put up a stock and we put up a strategy. That was something that no one had done that type of thing before. You've always been a leader in the industry, and I think that this is something that your quest to get better and to drive things is just awesome. And I hope that Tastyworks is, you know, not that as a trader, cost of doing business is a very, you know, good trades is important, frequency of trading is important, but cost of trades is important, and having a reliable, steady, stable platform is important. You know, unfortunately, just like the sound quality today is not that great, and we do apologize, but I hope that everyone can look through and just get past the sound quality issue and look at what's out there and take it upon yourself to look at what's come out in the industry with this new product called Tastyworks, folks. So, Tom, I got to tell you, man, I two congratulatory notes. One, for your diet and the loss of weight, because it's important that you're healthy, pal. And two, because of Tastyworks. And we look forward to seeing more of this, for sure.
You know, thank you, John. One of the things I've always appreciated about working with you, we probably go back now 15 years, you know, of doing things together since the early days of Thinkorswim all the way through, you know, lots of trade shows and lots of events into the Tasty Trade did. And one of the things that's always been fun with you is that you've always pushed me, and I, like, one of the things that I've always pushed you. When I mean pushed you, I mean we've always, like, challenged each other to think a little bit differently and to look at, you know, some of the things that, you know, you've always forced me to look at some of the things that you're doing, even though, you know, it wasn't my specialty, and I, you know, always forced you to look at some of the things that I'm doing, and I think that give and take, that, you know, very positive. You know, one of the things I love about building content and technology, and one of the things that really separates us is we have one objective: challenge challenge people to make decisions, and I think and challenge them intellectually, and I think that's kind of really cool.
It's true, and you know, you have, and I do remember that. No offense, you thought, not that I'm going to put words in your mouth, that technical analysis was quite something, maybe a little voodoo, and I know that you began to become a slight closet case technician, not a closet case, but you know, you
deny that to my death.
But there were some technicals, whether you call it technicals or not, looking at spread relationships. You know, we call that relative strength. It's a form of technical analysis. So there's some hidden words in there. So anyway, Tom, wonderful to have you. I know your schedule was tight, and we had a hard stop, and I think we went beyond that. I'm not sure, but again, thank you very much. And folks, we will do this again, and we'll figure out what's going on with the sound. We'll try to clean this up. I know a lot of people logged off because the sound was not great. But for those that stayed on, thank you so much. I mean, we did get a slight drop off, but the majority of people were here. If anyone's got a question for Tom, besides how much pounds did he lose, there's some really good comments here about, yes, Tastyworks is separate from Thinkorswim. People like my studies. We appreciate that. The PPS indicator, by the way, it was because of Tom right here, folks. If you use the PPS indicator on Thinkorswim, it was because of Tom that we put that on Thinkorswim. So the person's pivots, and I'll give one last little story down memory lane, Tom. And it was and I don't know if it was the 01, 02, 03, 04, I can't remember what trade show in New York. There was this guy in a beret, and I knew it was Tom, and he's standing at literally a table with a chair in his jacket and a laptop. And I guess the booth, the crew, the whole company got stranded in a snowstorm. I don't remember what the whole true story was, remember that. But only Tom was there showing his platform, Thinkorswim, and literally nobody was standing around him. And I came up, I'm like, hey, dude, what's the story? And you're like, yeah, John, you know, we had that little chat. So, and to see what you built from that was just amazing. You've been there's a term we say in the business called a mensch. You've been a human being, great guy. And I'm proud to have you, not only my friend, but I'm proud to know you. So, not that I want to give a lot of pats and accolades and things of that, but this looks exciting, Tom, and thank you for, you know, striving to want to create more innovation, because we all know you could have punched out and been on an island in the Philippines and, you know, been eating snacks. You know, we know that, right? Well, you know, I don't know, the Bali Island, somewhere out there, right? Anyway, so, folks, we'll clean this up. This looks great. And thank you, Gary L., for your comments, and David K. Thank you very much. There is a good question here, Tom. Is there a Mac version?
Well, you know, I don't know.
It is built for Mac.
Somewhere out there, right?
The entire platform is built on Mac for Mac.
Folks, we'll clean this up.
So
This looks great.
the answer is there is a PC version. It runs beautiful on Mac. It's built for Mac.
Okay, so there's a PC version, a Windows 10 version, there's an attaboy for your personal loss, meaning your weight. And thank Tom for me. Gary L. uses TOS all the time.
Okay, so there's a PC version.
Scott says sosnoff with David closing, going back to EBC and having turkey burgers at the bar. Does that mean something?
Sure.
Okay. Anyway, so Tom got a chuckle. If you didn't hear it clearly, he's chuckling there. Someone else says buy an island in the Caribbean instead. Intro video about the site. Tom, is there an intro?
No, but you can go to tastyworks.com and you can check out everything. You can watch also, you know, obviously we do Tasty Trade all day long, but you can go to Tastyworks, you can check out the site. There is currently a waiting list to sign up, so it's about 2 weeks long, and then just because we're throttling how many people we're taking right away, but if you want to just go sign up, like I said, it's only about 2 weeks, and then you're in for good, and you know, we're looking forward to having everybody on board.
Is that why my email wasn't answered? I didn't get the friend. I didn't say I know Tom. I know Tom. I didn't use the I know Tom card.
You'll be getting it any day now, John.
Now, here's another one, Tom. TJ, is there that was the intro version. TJ, you got your answer. Todd S. is asking, will will Tastyworks be available in Canada?
It will not, unfortunately. They're Canadian. It won't be initially. We have to deal with Canadian regulatory authorities, just like we had to do at Thinkorswim, which meant that we had to establish our own business in Canada. Otherwise, you can't do business in Canada. It's very complicated. Canada is the most difficult country in the world to do business in. So, unfortunately, we won't have a relationship in Canada initially.
All right. Last, it looks like a couple more questions here, but this is a pretty good one.
Fire away.
Can you try the platform without funding?
Yes, you can open an account and you can play around on the platform, but there's no paper trading yet. But you can open an account, download the software, and check it out. Sure.
All right. Someone's saying Tom should be the senator from Illinois, but on a more, I guess, relevant question, Daniel G. Tom's not going to put the running bid in for at least 2 more years. Edward says, is this free to download? Is data part of the platform, or do you have to pay?
Everything is free. You know, we don't have any hidden anything. The rates I gave you are 50 to 60% lower than the rest of the industry. Like I said, it's $1, $5, and $2.50. $1 for options, $2.50 for futures, and $5 for stock. And that's both ways, buy and sell. There's no charges disclosed. We have there's no platform fees, and there's no data fees.
All right.
We're eating everything.
We've got a script writer question here. Kelly's asking.
Middle of March for scripts.
Okay, so will it do scanning and allow scripts to be written? Middle of March is the answer.
It does scanning right now. It will allow scripts in the middle of March.
All right. So I'm going to answer the question for you. Is Tastyworks its own broker? I'm going to say yes.
Okay, so
yes.
Will it do scanning and allow...
All right. So the answer, TJ, was yes. What happens if Tom runs off to a desert island? A succession plan?
Good question.
Only if there's internet and an option platform, yes, but otherwise probably no succession plan.
Yeah, well, Scott's actually running the brokerage firm. I'm not running the brokerage firm. Scott Sheridan's running the brokerage firm. He's the CEO of the brokerage firm. I am running Tasty Trade, the network, and so there's a separation of power. And Christy Ross runs the whole combined company.
Okay, so Mahendra registered for Tastyworks 3 or 4 weeks ago, did not receive any email back. They're backlogged for that reason. It's going to take them, I think the question was answered already, Tom. Correct me if I'm wrong. Go ahead, answer.
We only started sending out the invitation yesterday, or 2 days ago. We only started out on January 3rd, and everybody will receive their invitation within the next 2 weeks. But we throttled them at first because we just wanted to make sure we can handle, that our account opening process worked, and then we did overload our support teams, with questions about funding and things like that.
All right. So that answered this one. How do I get invited to Tastyworks?
Go to tastyworks.com and sign up. You click on open an account and it takes you to an invitation to sign up. It signs you up for an invitation.
So they wanted to know about indicators and studies.
How do I get invited to Tastyworks?
We have about 100 of them built into the platform, but they're all generic. And so we haven't talked to anybody. Like, John, this is the first time you and I have really talked about things. We have not talked to anybody else currently, in that space. We built all generic indicators in there right now, and we'll see. I can't tell you what's going to happen. I mean, you and I have to sit down and we have to talk about it. We want to build those in there and things like that. I don't know the answer yet.
All right. Well, that was a question from that was Asia. Kelly, can back testing be done? Now that's I don't know if Kelly's already gotten his email, and I didn't. I'm going to be talking to you after the show.
So here's the answer on back testing. The good news is, starting in June, we will offer an open API into the platform, which we never offered on TOS, but we'll offer an open API into the platform. But we also are going to offer access to our scrub data for backtesting, because we were waiting until once we start paying the data fees for all of our users, then we can share and redistribute data with them that they can use to create content for us as well. So we have this theory on complexity. It's free, because if we share our data, people will will be happy to share back with us some of their findings, which we can then use as part of the content archives that we're building up. So for us, sharing our data is actually a very important part of what our future plans are, because there's so many smart people out there that want to do so much research that we want to share our data. So we're going to be starting in a couple of months, but we couldn't do it prior to this because we would have had to pay data distribution fees for each person as an individual. It didn't make any sense to do that. We didn't have the revenue to do that.
Right. I think this would be about the last question, because Tom had a hard stop LMO RFN order on his time. Let me out right frickin' now order. I think
I'm good. I got 4 more minutes if you want.
Yeah, well, that's the LMO RFN. It's a stop close only, and the close is in 4 minutes, folks. Does the platform support one-click option buying and selling?
It supports one-click everything. Everything. So you can do one-click options, you can do one-click multi-leg spreads, you can do one-click custom spreads, you can do one-click stock and options, you can do one-click, we're launching futures on March 1st, but you can do one-click futures and one-click futures options and one-click futures and futures options spreads. So everything is one-click.
All right, so that's a question that did come through that we can answer in March. Who's your FCM on futures? So we'll worry about that in March.
The FCM on futures is, I want to say I'm not 100, I'm almost 100% sure. I think it's FC Stone.
Right, so that's a question that
okay. I wouldn't arm wrestle you over that answer. That's probably true. I don't know. It sounds like a great FC Stone.
It's just our clearing firm actually negotiates that deal, so it's not really even in our hands. But I believe they're using FC Stone.
Okay. Sure. So, and again, it's not relevant until you get through March. So,
sure.
When you sure. But, and you know what? Hopefully, Tom, and we'll do this again. We'll do the testing of the sound check. This was This is your first outside appearance with Tasty Trade of announcing Tastyworks. I would imagine.
This is my first day. I did something just prior, just really small too. But this is the first day I talked to anybody today.
Well, I thank you for your time, and I know that you have a lot of loyal fans and listeners and friends in the audience today. Thank you very much, Tom, for exciting news about the platform and the new changes, the game changers of 2017. We had some trading information for the audience. We have your information for the audience, and that wraps it up. So, everyone, we thank you for your time. Tom, I thank you for your time, and we'll see you guys as the weeks progress. Tom?
Thanks, John. Sorry about the sound quality. I apologize.
No.
Just couldn't get it to work.
Yeah, it's all good. I think everyone, there's a comment that says, I was going to log off. I'm glad I stuck around to the end. So thank you very much for that, folks. That was Gary L. Thank you for that comment. Everyone, thank you for your participation. Great questions, by the way. Good engagement, and that's what makes us better as traders, engaging and being, as human beings, too, responsible in our questions. Tom, Happy New Year, brother.
Thank you. Thanks, John. Bye.
Good night, everybody. And that concludes tonight's session. We'll be back next time with if I may.